Today is the last trading day of 2022, and the market is set to end it on a sore note. Investors are summing up the grim year. Only the US dollar is in a positive territory. Nevertheless, market participants are entering the new year with mixed feelings. After all, the US economy is sliding into recession after a series of aggressive steps taken by its central bank. There is no sign of optimism in the commodity market as well. Oil traders are concerned about reduced energy consumption in the wake of a worsening epidemiological situation in China and around the world. By the way, Beijing has announced an easing of restrictive measures, rolling back its tough zero-COVID policy, which may help demand recover. At the same time, there is a global redistribution of energy flows caused by Western sanctions against Russia in response to a special military operation in Ukraine. Thus, the United States and a group of seven have agreed on a price cap for Russian oil. Now, Moscow threatens to halt energy supplies under contracts that directly or indirectly envisage using a maximum price fixing mechanism. From a technical point of view, Brent crude oil futures dipped, hitting a new one-week low. The quote briefly fell below the 82 mark, but then bounced up. To extend losses, the benchmark needs to return below 82.50. However, if the quote rises above the level of 84.50 when pulling back on the daily chart, it may well resume an uptrend. Meanwhile, the ruble is ending the week with a correction. The dollar continues to gain value against the ruble and has already hit a new local high. If the price consolidates above the 73 mark on the daily chart, the greenback will extend gains, heading for the area of 75 or 80. Until then, there is a likelihood that the price may return below the level of 70. The ruble weakened amid investors' fears that Russia's export earnings could decrease significantly amid limited supplies and oil production. For the time being, the quote is fluctuating, trying to find an equilibrium. According to currency market analysts, the pair will trade around current levels throughout the next year. As reported, Russia's finance ministry, the National Wealth Fund, has almost reduced to zero the shares of the currencies of the so-called unfriendly states. Now the yuan has become Russia's reserve currency. Its share in the fund has doubled to 60%, while the remaining 40% accounts for gold. Notably, Moscow accelerated a campaign to shift its reserves into more accessible currencies after Western countries banned Russia's central bank from dealing in the US dollars, euros and the pounds, as well as froze about $300 billion of its international reserves. Speaking of gold, the situation is also uncertain. After US inflation accelerated to a 42-year high, the Fed adopted an aggressive approach to fighting surging prices. As a result, the regulator raised the key interest rate by a total of 425 basis points to 4.5%. Of course, such a steep step had a negative impact on gold, which lost its luster as a long-term investment asset. Investors fled from gold to use government bonds and the greenback, and thus the yellow metal collapsed to a 30-month low. Nevertheless, today it's trying to stabilize above the key level of $1,800 per troy ounce. Despite buyers' subdued trading activity, gold is still set to reach the resistance area of $1,820 and $1,825. Thus, until the quote consolidates above this area on the daily period, a bounce cannot be excluded. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.